Hello everyone. Thank you for joining today's webinar. We will get started. My name is Rob Livson. I'm one of the senior sales and business development reps here at Lightspeed. We're very happy to have Ross Cameron of Warrior Trading present with us today. We always try to present different topics and have different educational aspects for our webinars, along with software training and different varieties of topics that we can provide for you. So we always try to provide a lot of nice content, educational and training wise. Before we get started, I just have a quick disclosure here. Please note that this presentation is for educational purposes only. There's no way is this to be considered any type of investment advice, guidance, or recommendations to buy, sell, or hold any security. Everything here is simply for a presentation and educational purposes. Do not construe anything to be actual investment advice. So we do thank you for joining. You can view this webinar later on as well on our website, along with any future webinars upcoming on the Lightspeed website. You can see here. We have another one coming up as well next week for tax preparation, so that's another good one that a lot of traders like to view. Then you could see a lot of our recent recordings as well. That being said, I'd like to introduce Ross Cameron of Warrior Trading. He's the owner and head moderator, educator of the Warrior Trading chat rooms and educational programs. It's a very popular partner of ours that we've been working with. They have been educating a lot of traders as far as chart analysis and just interpreting daily moves and patterns and everything involved with trading, and we're really happy to have him present. Today's topic will be about momentum day trading. He'll show you some chart setups and how to analyze and look at some momentum stocks. So we're very happy to have him present again. He's done webinar with us in the past. It's been very successful. So without further ado, I'm going to pass over the mic and the presenter status to Ross, and he can get started here for everyone. So thanks everyone for joining us, and feel free to ask some questions as we go. We'll try to get to them. If not, we'll try to get to them by the end, but we appreciate everyone's participation as well. So I'm shifting over the presentation now to Ross. So thanks everyone. We'll get started right away.
Hey guys. All right. So I'm going to get my screen share up here, and we'll be able to jump right in. Now, as Rob said, and thank you, Rob, for having me today. As Rob said, we will do Q&A, and you guys can feel free to post questions right in the comment section here. I'll answer them as we go, and I'll also do a Q&A session at the very end. Let's see, I just want to get my screen share here. I'm going to put up, all right, so, all right, there we go. You guys can let me know when you're able to see the screen. I'm going to drag this down to here. All right, so I've got my Lightspeed platform there, and you can see I'm up. This is my demo. I'm up $1,000 in the demo today, still holding a little bit of position there. Can you guys see? All right, sounds like you can. Okay, fantastic. All right, so let me go full screen on this presentation. So what we'll do is we'll jump into the slides. I'm going to go over my momentum day trading strategy. I'm going to talk a little bit about risk management, stock selection, and setting up your charts. And then we're going to jump back out, and I'll go back into Lightspeed, where I can look at any charts that you guys want me to look at, or answer questions that you have. All right, so let's go full screen here. So looks like we're going to have a great turnout today, which is awesome. I want to thank you guys all for being here this afternoon. I know for anyone on the East Coast, today is probably a snow day. It's snowing here, so hopefully we'll have good internet connection through the webinar. It should be okay. Now, ground rules for today, again, just to reiterate what Rob mentioned, that this is for educational purposes only. I'm not a registered financial advisor, so none of this is specific advice. This is all about me teaching you the techniques that I've used to make a living as a day trader. Now, if you've been interested in the markets for a while or kind of dabbling, you'll realize that this webinar is going to change the way you think about day trading. I have a very specific approach to how I trade the markets, and this approach last year made me over $222,000. This year I started January 1st with a $583 trading account, and as of right now I'm up over $51,000. So my goal is to hit 100 grand and then I guess set a new goal. Hopefully I'll get there by the end of first quarter, which is looking realistic. All right, so I'm going to teach you a little bit about the strategies that I've used and give you some pointers on how to find the right types of stocks to trade. So now, to give you guys a little bit more background about myself, for those of you who don't know, I founded Warrior Trading in 2012 as a blog. And I founded it as a blog to chronicle my experiences learning to trade the markets. And I also wanted to create a community where traders could come, connect, exchange ideas, and build friendships. And then in 2014, I taught our first day trading course, which I've now taught to thousands of traders all around the world. And when I taught that course, my mission, and this is also the mission when I started Warrior Trading, it was to help prevent beginner traders from going through the same frustrations that I went through. It cost me over $30,000 in losses and over $100,000 total before I actually started making a profit as a trader. So to help beginner traders in 2015, I took a break from teaching classes to write a book, and that book has become a bestseller. You can find it on Amazon and Barnes & Noble. It's a bestseller in the risk management genre, which is a very niche genre. It's not a Harry Potter or a Da Vinci Code, but for anyone looking for information about day trading, it has been very popular. All right. Now, over the years, I have worked with literally thousands of students. We've got over 3,000 traders that are part of the Warrior Trading community and that log in to trade side by side with me every single day. And I think one of the reasons that we've been really popular is because we focus on a very simple strategy. It's not designed to, make anyone a millionaire overnight. It's not about getting rich quick. It's about finding a technique to generate just modest profits from the market. And for me, I started with goals as small as 100 a day and 200 a day. And then I've been able to scale those up. Last week I had a day where I made $22,000. So this is to say that, yes, you can be very successful as a trader, but it always starts small, and then you build on what's working. So to start with setting your foundation, I'm going to start really by giving you some insight into risk management, because risk is one of the things that most traders really struggle with. All right, but before I do that, over the years, I've also worked with a lot of big companies to provide education to their clients, including Benzinga, eSignal, and several brokers, of course, including Lightspeed. Now, I've been featured on the Huffington Post. I'll show you that article in a little bit, Seeking Alpha, MarketWatch, and Investing.com. On so our social media channels, we're on YouTube. We've got over 1.5 million views on our most popular video. And between our Facebook, Instagram, Twitter, and all the social media profiles, we've got over 460,000 followers, which is pretty incredible. Now, a lot of people have also said some really nice things about us, including Dan Merkin. He's the CEO of Trade Ideas, which is a multi-million-dollar tech company, and they work closely with Lightspeed on several projects. And he called me one of the top teachers for traders and investors. In 2016, we were nominated for a Benzinga FinTech Award for Best Educator, which was also something that we were really proud of. So this is to say that we are very active in this space with traders and investors. And one of the things that's also very cool is you guys have probably all seen, there's a lot of educators out there, and a lot of them make these promises that you'll make $1 million trading. You'll be able to, drive a, I don't know, Lamborghini or something like that, fly on a private jet, sipping champagne and all that stuff. That's all good and well for marketing, but the reality is that's not what most people are looking for when they start trading. Most of our students are looking for sustainability and financial freedom in a sense. A lot of our students are retired. They're looking to make a little extra money in their retirement. They're not thinking about making millions of dollars, but making an extra $200, $300, $400 a day would make a really big difference. And after all, $200 a day consistently is over $50,000 a year. So I want to get you guys started on the path towards trading consistency. And it really is going to start with understanding the dynamics of the market and understanding risk management. One of the cool things about Warrior Trading is that every single day we have thousands of traders logging in, as you can see here, from all around the world. So I'm not sure where you guys are all logging in from this afternoon. As you guys probably know, I'm in New England and it's snowing here today. But I'm sure for some of you it's a nice, sunny, warm day. All right, now let's jump in here and get started. So as you guys know, when I got started trading, it took me a long time. It was trial and error. I tried to learn everything myself. And one of the challenges for me with providing education to day traders is that inherently day traders are usually the type of people that want to be independent. They don't want to be told what to do. They don't want to go take a class or anything like that. When you are thinking about becoming a day trader, it's a very independent, self-sufficient type of goal and mentality. And so that's in direct contrast with me trying to teach you guys and for you to be really good listeners. So I hope that you'll learn from some of my mistakes, including a day where I lost over $30,000 in the market because I was overconfident and I was impatient. I wanted to figure it out all on my own, but the reality is that path took a very, very long time. And you don't have to go down that same path. When there are people out there like myself who are happy to share, in my case, my templates for trading. Okay, so when we talk about risk, now I can tell you without a doubt that it is an inability to manage risk that's the leading cause of failure. And I'm sure Rob would agree, and almost any broker that looks at trading accounts would probably feel the same way. You see traders who come in, they blow up their accounts, they have really big losses, they make mistakes, and at the end of the day, no one goes into a trade thinking this trade could cost me $30,000, or this trade could blow up my account. But then suddenly it happens. So it's a lack of understanding of risk. Risk is very present in the world of being a day trader and trading stocks. And I think we know that on the one hand, but then we don't exactly understand how it works and how we can take certain steps to mitigate risk. So in what ways do we see risk as traders? Well, number one, we see exposure risk. Exposure risk is something that day traders can minimize by holding stocks for short periods of time. But exposure risk is the amount of money you have in a trade, so your share size multiplied by the price of the stock, and then multiplied by the amount of time you're holding that position. That is your total exposure. Now, number 5 is time in the trade. We can reduce time in the trade, and by reducing the time in the trade, we are reducing our exposure risk. But exposure risk, if you buy 1,000 shares of a $20 stock, you've got $20,000 of exposure. And this is the reality as traders, that money is out there. Now, we may say our stop is 10 cents and we're only risking $100, but if something happens where the stock gets halted or it drops suddenly in the middle of the day, we do actually have more exposure than that. So the second type of risk is the distance between your entry price and your stop price. So if you buy a stock at $5, 1,000 shares, and your stop is $4.90, you're risking $100. And that type of risk is very easy for us to understand, but we've all been in the situation, for those of us who've been trading, where you get in a stock at 5, you set your stop at $4.90, and then it suddenly drops to $4.70 or $4.60. And maybe your stop didn't fire, maybe it was a mental stop only, you didn't actually have a live stop order, and now suddenly you're down a little bit more on the trade. So the distance between your entry and your stop, although it is definitely a type of risk, you also have to think about number 3, which is slippage. Is this the type of stock that when you send the order, it may end up dropping another 10, 15, 20 cents, and you get filled lower? So thinly traded stocks, especially small caps, can be more prone to slippage, whereas very thickly traded stocks like your Facebook and Twitter and stocks like that, those usually have so much liquidity that you can get in and out with pretty big positions without too much slippage. Now, number 4 is float and volatility, and this, again, much higher in small cap stocks. Small caps with low floats are the types of stocks that can move 50 to 100% in a single day. We very rarely see that on stocks with floats of 100 or 200 million shares, but stocks with a float of under 20 million shares, we see it on almost a regular basis, almost on a weekly basis, where these stocks they come out with news and they suddenly squeeze up 50 to 100%. On the one hand, as active traders, these are all opportunities, and these are opportunities for us to quickly grow our accounts. But on the other hand, there's a lot of volatility there. Volatility is good, but it means more risk. There's more potential for us that if we make a mistake, it's going to be very costly. Number 5, the time in the trade. The longer we're holding a position, the more risk we take on, whether you're holding for 5 minutes, 5 hours, or several days. And of course, the longer in terms of days, the more your risk goes up when you think about, well, the stock, when is it going to report earnings? When is a headline going to come out? Or if it's a pharmaceutical stock or a biotech, what if they are currently running clinical trials and suddenly there's bad news, or if there's good news. I mean, you can be a hero overnight, or you can be a zero overnight, and that's the challenge with holding stocks overnight, especially in some of the more volatile sectors. And then the 6th type of risk is halt risk. So you guys may or may not know this, but at any time a stock can get halted, and it can get halted for a variety of reasons. But the fact is, when a stock is halted, you can't do anything. You just have to sit and wait. So stocks often get halted on circuit breakers, where they squeeze up 10% and they're halted. It's a volatility pause, halted for 5 minutes, and then trading resumes. And that period of time gives traders the opportunity to kind of think about, okay, what's the headline? Why is the stock going up? And sort of regain composure a little bit. It's to help reduce volatility in the market. So it kind of gives traders an opportunity to step back. Other types of halts can be a stock can get halted pending news. If they're going to result material news in the middle of the day, a stock can get halted, and if the news is bad, it can resume lower. And that's a risk. Then that risk really is, especially when you're holding stocks for longer periods of time, that risk goes up and up and up. So these are 6 of the types of risk, and I'm sure there's others, but at least 6 that we face almost every single day as traders. Okay, so there's a lot of risk, and you guys are realizing that. Trading is risky. Okay, so what steps can we take to mitigate our risk? Well, at the end of the day, good risk management is what separates the winners from the losers. And you guys have probably heard the statistic that 90% of day traders will fail to make money. And that's true. Those failures, though, I believe, are a result of trading with a lack of education and an inability or a lack of understanding of how to manage risk. But here's the thing. I think that failure is actually a choice that traders make. And they may not know it, but I think it's a choice because you can choose to learn how to manage risk. You can choose to get education. And when you choose to get training to learn how to manage risk, you're choosing to essentially take the steps required to be a successful trader. So for all of you guys, the fact that you're in this webinar, that you logged in today, or that you're watching it on the replay, it tells me that you want to learn more, and that you realize that the market is not something you can just kind of jump into and expect to be profitable right away. You've got to really study and train. So that's all really good, and I'm really happy that all of you are here today. The fact is, if you want to be a successful trader, you have to learn how to manage risk. And it's also a good idea to surround yourself with other traders who are successful, because it's one of these things where you kind of want to surround yourself with the type of people that you want to become. So it's always a good idea to surround yourself with profitable traders as much as you can, and that's one of the benefits, obviously, of being in a community like Warrior Trading. Now, the golden ratio that I always kind of refer back to is 2 to 1. And when we talk about risk, and this is important, I risk $100 to make $200. Now, if I risk $100 to make $200, how often do I have to be right to break even? If I risk $100 to make $100, I've got to be right 50% of the time. If I risk $100 to make $200, I actually only have to be right 33% of the time to break even before commissions. So doesn't that sound nice? A strategy where you could be right only 30% of the time, 33% of the time, and potentially break even? that's you setting the bar low. It's making it easy for you to be successful. But a lot of traders, they don't understand profit-loss ratios. They don't understand risk management, so they just, without knowing it, end up risking, let's say $1,000 when the profit potential was only to make 100 to 200. That's a negative profit-loss ratio. You don't want to risk more than you have the potential to make. I mean, you wouldn't do that if someone laid out the numbers for you, but a lot of traders take positions without really doing those calculations. So for me, whenever I look at a trade, I'm thinking about the profit-loss ratio. And although I sometimes have trades where I lose more than I intend, on average, I make sure that I'm around 2 to 1. So I might risk 500 to make 1,000. I might risk 1,000 to make 2,000. I might risk 2,000 to make 4,000. But the ratio is always the same, because that is a ratio that's sustainable. Success in trading is, it's kind of like sports in a way. It all comes down to your metrics. You either have metrics that, it's like you could look at a trader on a piece of paper and say, yeah, this is a trader that I want to stand behind, or, and I want to recruit to my team, like if he was a baseball player or something. Or you say, you know what, no, this guy doesn't have the metrics. The statistics aren't there. So what are those statistics? Well, you've got your profit-loss ratio, your average winners versus your average losers, and then you have your percentage of success. So when I have students that join our classes and work with me, and they start trading and they're only trading at 30 or 40% success, I don't usually worry that much, because I know that accuracy is something that improves with practice. What I really look at is, what's their profit-loss ratio? Are they showing me that they know how to manage risk in a smart way? So when I see that their average winners are $200 and their average losses are only 100, that's when I tell them, look, you're doing a great job. Keep it up. Keep practicing. Don't worry about the accuracy. It'll get better the more you practice. Now, one of the things that you'll also realize, once you've built this foundation in understanding risk management, you'll realize that sometimes the best trade is simply no trade at all. That sitting in cash is okay. Cash is a position, and it's a powerful position. If I look at a trade and I can't get a 2 to 1 profit-loss ratio, if I don't think I have the potential to double what I'm risking, I'm not going to take that trade. A lot of traders have to fight against the fear of missing out. And the fear of missing out is when we see a stock that's running, we see a stock that looks strong, and we want to just jump in. And we kind of sometimes put risk management to the wayside when we're in that mindset. We just want to get a piece of the action. Next thing you know, you bought a stock way too high. It starts to roll over, and now your loss starts getting bigger and bigger and bigger. And that's how you end up losing 1,000 when the profit potential might have only been 100 or 200. It starts to get emotional. So you always have to come back to that calm, cool, collected, mindset where you're really analyzing every single trade you take. Now, for me, last year, I made $222,000, and I took about 750 trades. So there's about 250 trading days in a year, which means I traded about 3 times a day. And I recently ran into a stockbroker who was telling me his experience dealing with day traders and how so many of them lose money. And I said, well, how often were most of them trading each day? And he said most of them were trading 30, 40, even 50 times a day. And I said, well, that's the problem right there. It's impossible to manage risk when you're taking that many trades. Just in terms of decision fatigue, you can't make that many quick decisions a day and still count on making a good decision. You simply can't. So I always focus on quality versus quantity. I trade less, and I trade the best, and I leave the rest. All right, now these are 3 tips that you guys should write down that can help you get better at managing risk. So number 1, before you take a trade, you should ask yourself, how much am I risking? And you should write it down. You should get in the habit of doing that, because you can't take a trade until you know what your risk is. To me, a trade is not a trade until you know how much you're risking and how much you could potentially make if it works. All right, number 2, only take trades when you've got the realistic potential to double your risk and profit. Whether you're risking 100 to make 200, 1,000 to make 2,000, or 10,000 to make 20,000, you need that profit-loss ratio. And number 3, I always add to winners, not to losers. Now, some traders like to average down. So if they're in a trade, they've got in at $3 and it drops to 2, they could buy more shares at 2 and bring their average down to 250. Well, to me, I say, look, if I got into a trade and it drops to 2, this is a bad trade. It's not working out. I should have probably sold it a lot sooner. And instead of adding more money to the situation and making it worse, I'm just going to cut my losses and get out. And even today, I had a red day trading today, and although it's frustrating and I never like to have red days, it's much better just to cut the losses and move on than to add to the losses, because they'll just get bigger and bigger and bigger. And that's how you eventually end up with a loss that can put you out of the game and end your career. You never want to empower a trade to potentially end your career. I mean, that's obvious, but when we're in the heat of the moment and we're so tunnel vision on looking at our P&L and watching these trades, we can lose sight of that. All right, so now that you kind of have a cliff notes and sort of tip of the iceberg understanding of risk management, let's talk a little bit about choosing stocks to trade. This is important. What we can do essentially is we can choose the strongest stocks to trade every single day, and by doing that, we've taken steps to further reduce our risk as traders, right? Because if we choose risky stocks, we're increasing our risk for loss. So to me, a risky stock would be pretty much any penny stock. I don't trade penny stocks. Pretty much any OTC stock. I don't trade OTC stocks. And for me, I don't trade options either. It's not that you couldn't trade options, but I try to reduce my risk and keep it simple. Now, out of the thousands of stocks on the market, thousands and thousands, how do you choose which ones to trade? How do you find that needle in the haystack? That's really what it is. I mean, there are a small handful of stocks each day that are worth trading, but how do you find them? Well, one of the things that I learned as a beginner trader as I was studying, and this was really, for me, the most important thing that I learned. I realized that almost every single day, there's a stock that's moving 20 to 30%. And you could check today. There are stocks today that move 20 to 30% every single day. So I realized, okay, I got to figure out a system of finding those stocks before they make the big move. Looking at them in hindsight, day after day after day, I keep feeling like I'm missing opportunities. So I created this system, and what I did was I had to really break down the anatomy of the type of stock that had the potential to move 20, 30, 40% in a day. And guess what? All of those stocks had something in common. So once I figured that out, I was able to build a set of stock scanners to look for those stocks and just give them right to me. And this is kind of like, when you're looking for that needle in the haystack, you can either go, through each single piece of hay until you find it, or, you smarten up and you use a magnet, right? You use a magnet and you find that needle instantly. You just saved yourself, thousands of hours of trying to find a needle, and you cut straight to the chase. All right, so that's the same thing with trading. And for me, when I break down the anatomy of these stocks, these are the 4 criteria that I'm looking at. Number 1, float. Almost all of the stocks that make those really big moves have a float of under 100 million shares. A lot of them have floats even lower than that, but 100 million shares is kind of my threshold. Above that, I probably won't day trade it. Below that, I'm probably going to be interested. Number 2, a catalyst. The strongest movers are almost always the result of some type of breaking news. When a stock comes out with breaking news, whatever it might be, they just got a $30 million contract, or they got, really positive clinical trial results, or, an analyst gave them a new price target. Any of these headlines can attract the interest of active traders, where traders look and they think, wow, this is an opportunity right here. This stock has great news, it's got a great daily chart, I'm going to take a stab at it. So I always look for catalysts, and this is kind of like which comes first, the chicken or the egg? Do you look for the catalyst, or do you look for the stock that's moving and then try to find out what the news is? Well, there are headlines going through, literally, all day long on dozens and dozens, maybe hundreds of stocks. So I don't check every single headline. What I do instead is I look at the stocks that are opening higher than they closed yesterday. That tells me something happened overnight. My job now is just to go check each of those stocks to figure out what that was. Is there news, or is this just something, is it a non-event? Number 3, ideally these stocks, the stocks that have home run potential almost always are stocks that have a history of making big moves. So if a stock ran 30 or 40% at some point in the past, there's a good chance it could do it again if it has the right setup. So we always create this list of former runners. I have a list of about 100 former runner stocks. These are stocks that have made big moves, And I know that anytime they have a good headline, there's the potential that we could have, another really big move. This doesn't guarantee it, obviously, but it's potential. And then number 4, ideally, these stocks will have strong daily charts where the price is above the 200 exponential moving average. I can scan for all of these indicators. Now, I scan using Trade Ideas, and the cool thing with Trade Ideas is that it integrates really nicely with Lightspeed, and I'll show you how that works in a minute. So these scanners, I've taught them to look for the type of stocks that I love to trade. They search the market, and they do all the heavy lifting. They come back, and they give me the list of ideas. Now, I just have to manually search through these stocks to figure out what's the headline, is this really good news? Is there something that's really interesting here? But generally, I just sort these by the highest relative volume. Whichever ones have the highest relative volume, and this is important, I'm using the word relative because volume is not the same for every stock, right? What is high volume for a stock like IBM is not the same as what's high volume for a stock like, Bank of America. These are very different stocks. So we talk about relative. What's high relative to normal? So I sort by the stocks experiencing the highest volume, the highest above average volume versus what they normally experience. And that tells me these are stocks that lots and lots of traders are looking at. The traders are excited about, that they want to get a piece of. Now, each morning, for me, starts the same way. It starts by going through the gap scanners, breaking them down stock by stock until I find usually 3, 4, sometimes 5 that look good. And this is what my watch list looks like pretty much on every morning. I put together this watch list, and I publish this for all of our students. So it saves our students the time of having to build a watch list on their own. But for those that want to build a watch list, that's fine too. This just helps them confirm that they're either looking at the right stocks, or that we're all looking at the the same setups, or that maybe they're got themselves lost looking at poor quality setups. Helps them understand whether or not they're on track. So what I do is I break down the stock. What's the float? What's the catalyst? How much is it gapping up? And why do I like the stock? What is the potential? What's the setup? All right, so here are a couple of tips to help you choose stronger stocks on a daily basis. Number 1, only look at stocks with high relative volume. That means above average volume. All right, and remember, stocks only trade on above average volume when there's a catalyst. And a catalyst can be something as simple as a technical breakout on the daily chart. It doesn't always have to be breaking news, although breaking news is ideal. Number 2, check to see if the stock has breaking news. You can use Lightspeed, you can use MarketWatch, Benzinga, StockTwits. Just check a couple sources and try to figure out, is there a headline here? Is there a reason the stock is moving up? And then number 3, ask yourself if this stock is experiencing extremes. I only trade stocks at extremes. Okay, so that means I could look back at this on a daily chart, and 6 months from now I could say, yeah, that was a day that stock was worth looking at because it did something incredible. It made a really big move. So now let's start to look at a couple of charts. One of the things that I always talk about is following the volume. This right here is an example on the left of a low volume stock. There's no volume in here. This pattern is, it's not even really a pattern. It's just kind of a couple of candlesticks, some algorithmic trading. Whereas this here, this is a stock that had very high volume. And so we start to break it down. Lots of volume. The first pullback, traders get into that. This is one of my favorite setups, buying the first pullback down to the moving average. This is the 9 exponential moving average. I buy the first pullback, sell through the push. Buy the second pullback, sell through the push. And this is a stock where really in the period of 30, 40 minutes, I could potentially make thousands of dollars just trading these pullbacks, this simple pattern. Now, I won't see this pattern every single day, but I've learned that I can sit on my hands and wait for A-quality setups, because when I get them, they can more than pay for the days where I was just sitting and waiting. All right, so now let's spend a couple minutes breaking down the charts. I want you guys to understand how to set up charts. A lot of traders get very complex with their charts, and I really like to keep it simple. You don't need to have tons of indicators. To me, it can just confuse things. So this is what my average chart looks like. It's pretty simple, right? and I'm a trader who made 6 figures last year. So this tells you that you don't need all these fancy indicators on your chart to make good money. All I have are my moving averages. I've got the 200, I've got the 50, I've got the 20, and I've got the 9. All right, so I find my entries based on candlestick patterns. These indicators, these help me understand the current price action and its context. It tells me whether the stock is strong or weak, but I don't need to have these on my charts in order to feel comfortable taking trades. You can see here these moving averages. These are very well-respected areas of support and resistance. This is a stock that came up and ran into the 200 moving average. Now, if you've been able to see that on your chart, you would have known that this probably isn't a stock that you want to buy right around $4 because it's going to hit resistance right here. That's why I said I like stocks above the 200, not below it. You can see my moving averages are pretty simple. I just go in, pop them on here. We've got the 20, the 50, the 200, and the 9. They're all exponential moving averages. This is another example of a stock coming up and running into its 50 moving average right here. So when we look at stocks, we want to see relatively strong daily charts where we don't have a lot of this overhead resistance that comes in the form of moving averages. Here's another one. It's a perfect example. The stock gaps up. It looks great, but what does it run into? The 200 moving average right here. It runs into that, and then it rolls over off that level. It just, it can't break through it. There's too much resistance here. This is another example, and we see it again and again and again. Now, on this day, this stock happened to be very strong. It was sort of a technical breakout. It was the first day to make a new high. It squeezed up from $2 all the way to $4, which is a 100% move. I mean, this is huge potential. And then the next day, it opened high and just sold off. Now, down here on this day, we started to squeeze up, but we were running into this resistance level, and we couldn't get over that price, that moving average. And here's another example where you've got tap once, tap twice, 3 times, 4 times, 5 times. So lots of traders are using these same indicators. And that's the thing. I like to use the indicators that are widely used by other traders because those are going to have more validity. More traders using them means that more traders are respecting them. More traders are going to set their stops around these levels or start to take profit around these levels because they recognize this could be a source of resistance on the chart. This is a cool example where this stock dropped down 3 times and kept bouncing right off that 200 moving average. So when it happened, when it was coming down on this 3rd time and I saw this, I started to think this might be a good place for me to take an entry because of what it did this last time. Right? So when you see it starting to pop up, you start to recognize there's a little bit of a pattern here. Now, the one other indicator that I will sometimes use, and you can see it on this chart, are Bollinger Bands. Now, the reason I like Bollinger Bands is because almost all of the price action of a stock will occur inside the Bollinger Bands. Therefore, when the stock is trading outside the Bollinger Bands, it indicates that this is really at extremes. And when I see a stock at extremes like that, I start to think it's due for a reversal. So when a stock is really extended and outside the Bollinger Bands, I start to look for a possible short. And you can see right here, we got the squeeze up outside the Bollinger Bands, shorting back down. Squeeze up outside the Bollinger Bands, and then shorting back down. So, this is a different strategy from momentum, but when you have a stock that's extremely strong, that shows you lots and lots of momentum, at a certain point, you know that the tide is going to shift. And so by having this indicator, you can understand, number one, as a momentum trader, when to start thinking about taking profits, and number two, if you want to trade reversals, that's when you can start to think about taking a short position or taking a long on a bottom bounce. Now the Bollinger Bands that I use are really simple. I use the 20 length with the 2.0 standard deviation. It's nothing fancy. It's, again, the same Bollinger Band settings that everyone would use, the default settings. That means they're well respected. Lots and lots of traders are using them. Now, tomorrow we're going to be hosting a webinar, and during that webinar we're going to talk about some of my other strategies, and we're going to talk in a lot of detail about trading bull flags. Bull flags are one of my favorite patterns. The bull flag as you can see right here, is a pattern where the stock squeezes up and then pulls back, usually for sometimes two, sometimes three, sometimes four consecutive red candles. And then the first candle to make a new high is our entry. So the entry price is right here, and then we sell through high of day. This pattern right here, I mean, it's easily made me probably $50,000 in the last couple months. I mean, I trade it again and again and again. Anytime I see it, it's a pattern I've got a lot of confidence in. So having the skill to identify the pattern in real time and then the confidence to take the trade, you know, that's really where it's at. And it takes time to build that, but that's the goal for any trader. This right here is a day where I was simply trading bull flags and I made over $4,500, which, you know, that's as much as most Vermonters make in a month. So to be able to make that in one morning is definitely pretty impressive. The squeeze up, the pull back to the moving average, consolidation, next entry, pull back to the moving average, consolidation, next entry. This stock went from $2 to $10 in one day. So this had a lot of potential. This is the type of stock where, you know, an aggressive trader might get in here with 10,000 shares, maybe 20,000, and hold it for 1, 2, 3 points. I mean, big traders with big money, deep pockets, could easily make $10,000, $20,000, maybe $30,000 on a stock like this. All right, so now to give you a couple of tips for setting up your charts. Number one, keep it simple. All right, now, you know, I only use the moving averages aside from the Bollinger Bands, which I don't use on all my charts, but keep it simple. If stocks are above the 200 moving average, that's usually strong. If they're below it, it's usually weak. Number two, if you're going to use indicators that are really popular among retail traders, among active traders, because they're more likely to be well respected. More people are going to be seeing that indicator. If you start using a really obscure indicator, you know, that whatever you found somewhere, you download it or whatever it might be, odds are not many people are watching that indicator. You know, you could say on the one hand maybe that gives you an extra edge, but generally the reason these indicators work and the reason stocks even move is because of the collective trading mentality, because you've got tens of thousands, hundreds of thousands of traders all looking at these same patterns. And that's kind of what makes them either work or not work. These traders all recognize the same indicators, either to buy or to sell. So that's why I like to use it. If I'm going to use an indicator at all, I use the ones that are popular among retail traders. So maybe the MACD, maybe the RSI, maybe the Bollinger Bands, or the moving averages. All right, so, and then the third tip is to use indicators, if you're going to use them, that will draw your attention to extremes in price action, because those are opportunities. So for instance, one of the scanners that I have scans for RSI below 5 or RSI above 95. Those are pretty extreme. I mean, RSI goes from 0 to 100. So anything between, you know, 5 and 95, I don't care about. But when we're up in the high 90s, like 97, 98, 99, that's a very extended stock, and it's possibly due for a reversal. Or I see a stock that has an RSI of 2 or 1, I'm going to start thinking, okay, this thing has to bounce at some point. I'm going to start looking for that reversal trade. So it's bringing my attention to extremes in the market. All right, now I want to talk for a moment about one of the struggles that I've had as a trader. Even though I've been doing this for a long time, you know, like any other trader, there are times where I've fallen into ruts or I've had my struggles. And one of the struggles that I've had in the past is that I would have months where I would make $10,000 to $15,000, and which is, you know, at this point that would be a small month. But in the past, that would have been a good month. And then in a single day, I would lose like $5,000. And in one day, I'd give back, you know, half of an entire month. And it's such a devastating feeling to be trading, you know, whatever, for an entire month and then give back half your profits in one day. And imagine, for instance, like if you hired someone to build a stone wall for you, and he builds a stone wall for an entire month, and then you come along and knock down half of it. And, you know, I mean, how frustrating would that be? Well, unfortunately, this is kind of part of the life of a trader, that every couple of weeks, part of the wall is going to get knocked down. You know, yesterday I made $10,000. Today I lost $4,000. So, you know, a little part of the wall got knocked down. But when I'm making $30,000 or $40,000 in a month, losing 4,000 a day is not as bad. When I was making only 10, 15,000 in a month, losing that much in a single day was really frustrating. I was giving back a lot of progress. And I realized that I needed to make some changes in my strategy really to, to adapt in order to survive. So these are the changes I made. I said, first of all, I'm over trading. I'm trading lots of poor quality setups. So what I need to do is I need to increase my quality standard. And I need to only trade the best quality setups. I need to trade only A quality. And then number two, I said, if I only trade A quality setups, that means I'll be trading less. But in theory, my accuracy will go up. So what I'm going to do is I'm going to trade twice my regular share size when I take an A quality setup. And this was a rule. I had to. I usually would take 2,500 shares. Now I would take 5,000. And that meant that when I was about to press the button to buy 5,000 shares, I started to feel a little nervous because I started to think, wow, if this goes the wrong way, I could lose 500 or 1,000 bucks pretty quickly. So isn't this going almost against that rule of minimizing the losses? But here's the thing. Because I was feeling a little nervous, I inherently became even more selective. I would really only trade the best quality setups, and my accuracy went up a lot, because I wasn't trading the junky stuff anymore. And as a result, over the course of that next month, I had the best month I've ever had at that time, which was $34,500 in profits in 1 month. I traded less, but the trades I took were higher quality with bigger size, and the profits were bigger. Now, I exported all of these trades along with my broker statements for our students so they could see. Now, even during this month, I had one day where I lost $4,000. I still had one bad day right here, but that was just the result of being aggressive, taking big size, and it not working. But because I had that mindset of only taking A quality setups, this losing day was basically the same size as my good winning days. So it didn't wipe me out. It wasn't setting me back in a half a month or anything like that. It was just a small step back, and then I was able to rebound pretty quickly. During this month, I traded with just under 70% accuracy. So my accuracy was really good, and I had a really good profit-loss ratio. Now, what I did, of course, for our students was export all of these trades so they could see the report and they could really understand what I was doing right and what I was doing wrong. And I also verified them with my broker statements because, there's a lot of traders out there that make big claims. If I'm going to make a claim, I'm going to back it up with a broker statement and show you that, this is real money. This is a real trade. Now, at the end of that month, it kind of was like, all right, this is great. I just had a terrific month. I've got this new sense of confidence. I trade less, but when I trade, the setups are really strong and I'm making more money. So let's just continue on. This is now a set of rules that I'm just going to follow for a while. The next month I made $32,000. The month after that I made $29,000. And over the course of 3 months, I made $94,119, and I was featured on the Huffington Post. So this was the summer of 2016, and it was really, it was a fantastic hot streak. To make $94,000 in 3 months of trading, it was awesome. I went from having about $40,000 in my account to having $150,000 in fully verified gains. And that showed me that this strategy works. Not only has the strategy worked, for a long time, but with these slight modifications, I was able to really get this strategy to go exponential. I finished the year with $220,000 in profits, and then I started January 1st with $500. And the challenge was to see how long it would take me to grow that account into $100,000. And so here we are. Today is day 27 of the small account challenge, and in 27 days, I've grown that account up to $51,000, which is, obviously a pretty impressive return. Now, I wouldn't have been able to do this if I weren't managing risk on every single trade I take. It comes down to managing risk, to choosing the strongest stocks, and then trading those bull flags, trading those patterns. Those patterns, I trade them every single day, and they really are my bread and butter. Traders have, it's always good to have a kind of a tool belt of different strategies that you can refer back to and different patterns, but without a doubt, the bull flag is my favorite. So again, we're going to host a webinar where you guys can learn more about that. But in the meantime, at the end of that summer, I felt more confident than ever. Students in the classes, they were kind of loving the new me because even though I traded less, the trades I took, for the most part, were more successful, more profitable because I had this higher quality standard. All right, so what I want to do now, we've got about 10 minutes. I want to do some Q&A and answer some questions that you guys have, and I can also look at some charts if you guys want me to. And before we do that, I want to, kind of just remind you guys that when I talk about, the amount of money I make, and this is one of these things that when we're traders, we're always thinking about, how much money did someone make in a single day? And, in the real world, you don't go up to people and say, how much money did you make last year? You know what I mean? Like, that's not something that you do. But as traders, it just kind of becomes part of the deal. So I want to, and I should have prefaced what I said by saying this, but I'll say it now. When I say these things, I don't say them intending to be braggy. I'm not trying to brag. I'm not trying to, say I'm successful or I'm anything that special. I'm really not. I'm a trader who struggled for a really long time, and through all of those years of struggling, I was able to come out on the other side with a strategy that for me has been able to give me the life that I kind of always wanted. I mean, I've got financial freedom. I can buy the things that I want. I don't have to worry about money. I, work from home, and it's really a great job. I love trading. I love every day the market gives me something a little bit different. So, for me, when I talk about the gains, I'm talking about them really to show you that I am someone who has authority to talk about this topic. There's a lot of traders out there who might have ideas of things that you should do or shouldn't do, but if they're not profitable, it's hard to know whether or not that's someone that you should actually listen to. I'm not trying to cast judgment, but just something that I wanted to say. So, all right, now we'll back out of this here for a minute. Also, a reminder, almost every single day I go on Facebook Live, and you guys can go on Facebook Live and watch me streaming. I do my midday recap at 12 noon Eastern Time. And then I upload those recaps to YouTube. We've got about 70,000 followers on our YouTube channel, and love to have you guys check that out, subscribe, and you can get those videos anytime I update them. I also do a daily podcast, and you can stream that podcast on your iPhone or iPad or whatever that might be. All right, so let's see. So we'll jump out of this here, and you guys should be able to see the Lightspeed screen. Now, one of the reasons one of the things I love about Lightspeed is the fact that there's a couple things. This is a fantastic platform for day traders. Number one, because you have direct access routing. So that means instead of just routing with one option, like just say limit, for instance, you can go in here and you can choose to route directly to a market maker. So we see EdgeX right here, Edge. So I can choose to route directly to Edge. I can go down here and I can say I want to route directly to him because he's sitting there with 300 shares. All right, or I could say I want to route directly to NASDAQ because he's sitting there with 100 shares. You can do direct routing. So that means your orders are usually going to be a little bit faster. And to me, if I see a buyer or a seller sitting on ARCA or sitting on NASDAQ, I might as well send directly to that market maker. If I send through just a standard limit order, although it might be a little bit cheaper, save on commissions, to me, it just makes more sense to go direct to where I want to go. So number one, we've got direct access routing. And this is good especially for traders who take pretty large position sizes. You want to be able to maybe get in using two different market makers. And so you have your super smart orders, let's see where they are, where you can route to multiple market makers. And then you've got your hotkeys. And hotkeys for me are, that's how I trade. Now, a lot of you guys know that I trade pretty quickly. So when I look for a stock, and we can just pull up a stock here. Let's look at BNTC. Let's see. This one we were trading a couple days ago. Let's see. This is kind of where I was thinking. Right in here. So on this day, let's see, where was this? we have this stock. It just went absolutely parabolic. Let's zoom in on this a little bit. Let's see. So you can see right here on this day, we went from this pullback down to 320, and then from 320 all the way up to 420, pull back again, 360, and then a move up to 420 and 440. So a stock that had a really big range. Now, when I see stocks that are moving like that, I want to be able to get in them quickly, and the fastest way to do that is to use the hotkeys. So, for instance, I have Shift 1 set up, so when I press Shift 1, see how fast that order went through? I mean, I'm in the demo, but it goes through so quickly. Shift 1, I'm in the trade. Shift 1, I'm in the trade. I want to get out of the trade, I use Control-Z. And that's how quick, that is literally how quickly you can trade. Now, people that don't know about trading, they don't realize how fast you can execute orders. That it can be just as fast as press 1, press 2, press 1, press 2. I mean, it's super, super fast. So the way I do it is I go in here to custom orders, and I have sell whole position, and I've got it both on the bid, -5 cents, and then on the ask. So in this one, if I edit this command, I've chosen my route, and I'm saying that I'm going to sell on the bid, 5 cents below the bid, the full position, but I could also choose to sell half or sell a quarter. So if I'm in a trade and I'm suddenly up, 15, 20 cents, I don't need to start to fumble to, manually type in this order. And then, say I'm on like a web browser, type in the order, and then go through a confirmation window, and then, confirm it. All I have to do is press Control-Z, and I'm out of the trade. It's that fast. So traders, active traders, we're looking for short-term opportunities in the market where we see a stock that's suddenly spiking, whether it's from breaking news or a stock that was gapping up overnight. When we see these opportunities, we need to be able to move quickly. So having the tools to be able to trade fast, I mean, it really is a requirement. It would be like trying to ride a road bike in the mud, like on a muddy trail. I mean, you're using the wrong tool for the job. And so whenever we have students in our classes that are, using a platform that's really not designed for active traders, I always tell them, look, guys, you need to use a better tool, because if you're going to if you want to keep up with some of the fastest traders out there, you need the right tool. And this is definitely it. All right, so let's see. Which is bullish, big share size on the left or the right, Quinn? So when I'm looking at the level 2, what I'm looking for are, if I'm a buyer, I like to see a big bid. And we can pull up a stock like, this is, let's see, maybe another one. Sprint, Siri, these are stocks that usually trade pretty thickly. Bank of America, I mean, you've got 2,500 shares here on the bid. That's not really a big bid. Sprint has 31,000 up on the ask. So a 31,000 share seller, that's something that's going to draw my attention. If I saw this, I would think, you know what, I don't want to get in this at 78 until this guy moves out of the way. This guy's kind of like a ceiling. He's got that big order there. It's just sitting there. It's going to be a problem. On the other hand, if I saw him sitting on the bid at 75, I would think, look, I can go ahead and get in here at 77 with 10,000 shares, and if I need to bail out, I see that there's a big bid right there that could probably take my order. Now, it doesn't mean he won't cancel his order and disappear, but that's kind of what I look for. I look for a big bid on the left side when I want to be long bias, when I'm wanting the stock to go up, I want to see strength. And then if I see this big seller on the ask, that's when I'm going to start to feel a little bit cautious as a long bias trader. And I am primarily a long bias trader. I sort of think of trading as like, and I don't know if this is the way all traders think of it, but I sort of think of it as like being a lefty or a righty. You sort of have a bias one way or the other. And for me, I just see the market from this long bias where I look, and any pattern I see is like, this is a setup that's going to go up or it's not going to work. I don't really look at the market from a short bias. So I know that everyone's a little bit different on that, but in any case, so let's see. Yeah, so that, and this is kind of the way I have my platform usually laid out. I've got level 2s on either side. Down here, I can manually prepare orders. So if I want to, pre-market, I'm thinking, oh, I'm going to buy the stock, 1,000 shares, and I want to get in at 1670. I can just type the order. I don't need to use the hotkey. But once I'm in the trade, then I'm going to use the hotkey to start selling. And I can do that both to sell on the bid and the ask. So for this one, I'm going to buy this. So I'm in at 78. And now I press, let's see, buy this. I can put orders out to sell on the ask. This one's kind of funny. Well, we're after hours, so it's not always the same. Let's see. But in any case, I've got my hotkeys to sell up on the ask, either half or quarter positions, so I can start to scale out into strength. And one of the other things I was going to show you guys is this scanner, and this is the last thing I'll show you. This scanner here with trade ideas is programmed to look for the type of stocks I like to trade. And I can just double click this and it immediately populates here. So it just makes it super, super fast. You know, I don't have to enter it twice. I can just press it once and jump right in. Let's see. There we go. Get that zoomed in a little bit more. All right, guys. So again, just a reminder, we'll be hosting a webinar over at Warrior Trading. For those of you who are here in this live webinar tonight, we'll definitely be hosting one tomorrow, but we do host them from time to time. So if you're watching the recording, feel free to make your way over to Warrior Trading. If you want to see more videos, go to YouTube. You can search us for Warrior Trading on YouTube. Check us out on Facebook. Stop by the website, warriortrading.com, and I hope I will see you guys at some point in the chat room, part of the community. We'd love to have you. All right, so again, thank you guys for having me today, and I want to thank Rob for putting this together, and be excited to do it again soon.
Thanks so much, Ross. That was great. I'm sure everyone got a lot out of it. I know I did. That's a lot of people need to really look up the risk management and have a strategy, and you really laid out some really key points. I hope everyone was really taking notes here, and obviously they should take a look at some more of your webinars and join your room as well. So we thank you for presenting here today. Everyone, please note this will be on the website, and we hope to have Ross come back again to share some more thoughts as well. So I want to thank everyone for joining us. Thank Ross for the presentation, and everyone have a great day. Thank you very much.